Let's take a look at this week, actually. So 5 a.m. 5 a.m., 9 a.m. Let's random example here. Let's rewind the time, make it easier. So we are on the 4-hour time frame, looking at the Euro USD, the Euro dollar, 5 a.m. So that is confirmation number 1. Right? Timed. Let me actually, before I do that, let me just type it. Timed CRT. Now, what is confirmation number 2? Lower time frame CRT within the higher time frame CRT. Let's just fix up the range. 15-minute CRT at the lows of the 4-hour CRT. Let's try to find one. Just by looking at this area on your chart, what do you see? Well, I see a CRT right here. Let's put these lines a bit thicker. This is the 15-minute time frame, lower time frame CRT within the higher time frame CRT. Higher time frame CRT represented by these blue lines. And the lower time frame CRT represented by these black lines. 15-minute, 4-hour. Confirmation number 2. Lower time frame CRT within the higher time frame CRT. And we need one more confirmation to allow us to execute the trade. What is that? What is that we're looking for? Turtle soup needs to occur at 9 a.m. up until 10:30 a.m. Turtle soup at 10:45. So this is a perfect example, actually, live. I did not test this out beforehand. As you can see, price did not turtle soup at 10:30. Price turtle souped at 10:45. Does that mean this is not a possible entry? No, it does not. All this means is that your probabilities of the setup working to its best potential drop immensely. So you can still enter. For your risk to reward purposes, drop your size. The chances of you winning this trade are lower probability CRT setup. Why? Because the third confirmation that we are looking for is a timed purge. And the timed purge for the 5 a.m. model is between 9 a.m. and 10:30 a.m. The purge over here happened at 10:45. All right. On a 15-minute time frame, we can see a lower time frame, the lower time frame CRT right here. Candlestick close. You can enter once the candlestick closes and target the opposing end. Ultimately, your final target can potentially be at the opposing end of this 4-hour CRT. If you're scalping, you would put it somewhere else. Now, the full move is actually to have your partials at the lower time frame CRT high, and then the next partial at the equilibrium between the 4-hour CRT low and high, which would be right over here. Partial number 2 and full TP. So first partial, second partial, full TP. So there was no third confirmation. Let's try to see if we find any other confirmations, right? We have CRT inside bar available for us to look for. We have the higher time frame key level available for us to look for. So our CRT came from a 4-hour. What does that mean? Our key level must come from a daily chart, which we have on a daily time frame. Any key levels here, guys? The only key level available, if you choose to use them, are the daily highs and lows, not any random high or low. So this I have not mentioned on my YouTube. You guys should write this down. Daily highs, daily lows, weekly highs, and weekly lows are key levels. Do not ignore them. There's a reason why price rejected this low. All right, so the daily low is the key level. Third confirmation, key level, entry long. All right, now let's take a look at another example. Hopefully we find an example where the 5 a.m. CRT model actually formed to perfection. Let's just erase all of this. And try to find another setup. So 5 a.m. and 5 a.m. Let's use the same lines. So I can already tell just by looking at this, this would be a more advanced entry. So for the beginners, maybe you might not want to execute this. However, feel free to backtest. You must backtest everything. For the advanced traders, pay attention, listen up. Second candle soups the high and hits the low. Now, some people will say this is not a CRT. This is absolutely a CRT. The low was hit in the second candle, and the high was souped in the second candle as well. Let's rewind the time. Let's just advance this here. So confirmation number 1, what is it? Well, we have the higher time frame, timed CRT range, right? Timed CRT range. Confirmation number 1 timed CRT. Confirmation number 2, 15-minute lower time frame CRT within the higher time frame CRT. Let me just draw this out a little better. 4-hour. Go 4-hour. 15-minute time frame. Do you see a CRT? There's 2 potential ways you can draw the CRT. One way being right here, and the other CRT on the 15-minute time frame would be right here. Just so happens to be that the 15-minute CRT high aligns with the 4-hour CRT high. So there was a higher chance that this CRT high would have been respected. As soon as the candle closes back into the range, your entry occurs. So you would have entered price up here. Stop loss and take profit. Now, if you enter at a order block, this candle, 5 minutes, look for a thick up close candle. And I would not consider any of these order blocks. Now, you could wait for a breaker. What is a breaker? This candle right here. As soon as price closes below it, we retrace into the breaker and trace back lower. Back to a 15-minute time frame, we have the lower time frame CRT. That is confirmation number 2. Lower time frame CRT within higher time frame CRT. Let's mark that down. Confirmation 2. Lower time frame CRT within higher time frame CRT. Confirmations. Let's make this bigger and put this here. So we have first confirmation higher time. First confirmation timed CRT 5 a.m. specifically 5 a.m. high probability CRT time, and the second confirmation lower time frame CRT within higher time frame CRT. The third confirmation that we didn't find in the other setup, that is a part of the 5 a.m. model. The purge turtle soup must occur during the 9 a.m. hour up until 10:30. Let's see when it happens on the 15-minute time frame. At exactly 9:30, market open. New York stock market opens, Judah swing, manipulation up, and continuation lower. This is a perfect setup. Between 9 a.m. and 10:30, we have the turtle soup, a timed turtle soup. So, confirmation number 3. Let me just confirmation number 3, a timed purge or turtle soup. All right, so there is 3 confirmations here. Now, can you find any other confirmations? Yes, of course you could. What is an example? Within the lower time frame CRT, we formed inside bars. What do you see? CRT plus inside bar. CRT, inside bar. Is there a higher time frame key level for the higher time frame CRT? 4-hour CRT high. Let's look at a daily time frame. We have a fair value gap right here. Let's draw that one out. So we hit the key level. The key level is within the CRT. That is still acceptable, guys. So a lot of you beginner students will be confused when you see a key level being broken through, I guess you can say, on a lower time frame. However, if you go back to a higher time frame, you can clearly see we respected the key level. Right? On the 4 hour, we respected the key level, closed inside of the key level, and had a turtle soup. Right? On the lower time frame, it looks like we broke through it. Everybody is becoming bullish. Fake market structure shift, breaking through a key level. Well, at least that's what they think. Instead, we formed the lower time frame CRT within the higher time frame CRT while hitting a key level and started to expand lower. So in this one setup alone, we had 4 or 5 confirmations. Why do I say 4 or 5? Because the inside bar only occurred on the lower time frame. So that's going to be it. I'm going to touch base more on this 5 a.m. model later on, not today. That's going to be it for the Chapter 1 presentation. Now let's get on to the questions, Q&A time. I'm not going to read through any of the questions texted in the Telegram. I'm actually going to allow you guys all to speak one by one, ask a few questions. All right, let me allow everybody to speak. Please do not ask any questions until I say. We have a few more students that joined later, I can see. For those of you who joined later, go ahead and watch the recording, especially for the beginners. Chapter 1 is very important. I did not, before we get into the Q&A, I want to make something clear. Chapter 1 did not dive into CRT itself. It dove into the mechanics behind CRT. Within CRT, we have everything that I taught in Chapter 1. That's why it's very important to learn. All right, let's move on to the questions. Please, one person at a time.
Can I speak?
Yes, go ahead.
Okay. Thank you for what you're teaching us. That's one thing. And the other thing is, you're teaching us the chart with this euro US dollar. And I got another one. It's forex.com. So I see the same, like it's the 5 a.m. candle. But when I am trading, and it's CME chart, 4 hour, I don't have any 5 a.m. candle. So how can I fix that on the CME chart?
You're talking about futures?
Yeah. No. When I'm on Euro chart, it's 6E1 CME. That's the chart when I can trade on. I don't have any 5 a.m. candles. I only have. So I must be doing something wrong. So I only have 7. It's when I'm on the 4 hour chart. I don't have. I have the 6, the 2, the 10 on the euro. So do I have the wrong chart?
When you click Euro USD over here,
yeah.
Which chart do you click on?
Futures. But it has to be Forex then.
There are currency futures. You might be getting something mixed up. There are currency futures. They do exist.
Okay, but I just want to trade euro, and I'm on Tradeovate with TopStep.
On Tradeovate, you should be trading Euro USD, the currency itself.
Okay.
So you would be using Forex.com or FXCM or, Onada, Wanda. Whichever one of these, you just choose. I like to go FXCM.
Because now I always have two charts.
Well, are you executing on this chart, FXCM, or are you executing on the futures chart itself?
The futures. So I'm on. It's not the good one for me.
Yeah, that's correct. So you should be trading.
The futures market is. The futures market has got a different time frame. So you're not actually trading the euro dollar. You're trading the euro futures. So it's different. Okay. You'd have to check. If you're going through Tradeovate or TopStep, it's a futures broker. So you wouldn't be able to trade the euro dollar through the futures. You'd have to trade that through a different broker, in my opinion.
Oh, okay.
Yeah, that's absolutely right. I just pointed that out. This is what I am looking at is Forex, and what you said when I asked you what do you look at, you told me the futures, the currency futures. They're two different things.
Okay, so I have to change brokers then.
If you want to trade Forex, yes.
Okay. No problem. No, thanks.
No problem. Now, before we move forward, I want to mention something. The 2-6-10 times on futures pairs, futures currencies, or futures indices are important as well. So,
okay, thank you.
And also when looking at commodities such as gold or silver, and even oil, you can use 2-6-10 to your advantage as well. So.
Okay. Oh, thank you very much.
No problem.
Next question for the next one.
Next question, guys. Feel free to come up. If you guys have sent questions in the Q&A chat and would like to just ask them now, feel more than welcome.
Can I ask a question?
Yep.
I am finding difficult in if we are trading 4-hour chart, so we have to find our daily and drawn liquidity, or just we can trade like this.
Are you asking if you're trading a 5 a.m. chart, the 5 a.m. model,
yes.
You need the daily chart to help you out for the higher time frame?
Yes, like daily, weekly, or monthly to draw top-down analysis, which direction we have to take trade and draw on liquidity like.
Yes, so like I mentioned before, the higher time frame is important. When you're looking at the 4-hour time frame, one of your confirmations that I said is going to be the higher time frame key level. That means the higher time frame is important. Now, is the higher time frame the only thing to be looking at? No. Is it important? Yes. So, for example, Tuesday wicked below Monday's range. Price is currently expanding on a daily time frame and retracing, retracting lower. After what? After breaking through a high. Right? So we rejected a low, we broke through a high, and now we are retracing lower. Price expands, retraces, expands. We have a model formation here. Monday was rejected. The low was rejected on Monday. CRT, for those of you who know, Monday range model. CRT low, CRT high. Tuesday soup. We're bullish on Wednesday. And since we're bullish, price will likely tap into this key level. Now, at this key level, we can reverse lower. If you go on a weekly time frame, you might see that CRT that I pointed out. On my Telegram, in the group itself. We have a CRT high and a CRT low. So recognize how we're on the weekly time frame and our setup came from the 4-hour. High and low CRT. Everything I draw on the lower time frame can be drawn on the higher time frame. This is very important to understand because when people ask about, and this is not to insult anyone, but when you guys ask about higher time frame, how to find bias, you guys are overcomplicating it, because everything you learn on the lower time frame is used on the higher time frame. Everything. There's not one thing that changes. Why? Because time is fractal. And beginners, even amateurs, people who've done this for, I don't know, let's say only 2 years, someone who's only been trading for 2 years, they still fall victim to trying new things on the higher time frame because they are unsure. Whatever you do on a lower time frame can be done on the higher time frame. So weekly CRT, we are bearish. If we don't see this candle right here, we are bearish, right? We want to see price hit these lows. On a 4-hour time frame, let's just advance time to where we saw that CRT so I can explain it properly. Price has yet to hit the lows. We hit it right here, but we want to break through the low, at least see a close below the low. That is the weekly target. Weekly is bearish. Daily, so we want daily right here. Daily is bullish. So if the daily is bullish, but the weekly is bearish, and we see a daily fair value gap on the 4-hour time frame when looking for our entry model, the 5 a.m. entry model, we notice the daily fair value gap as a potential key level. And guys, what I'm explaining right now is nobody explains this. Romeo will never explain something as in depth as this, or actually Sham has done very well and he's been revealing a lot of info. But Romeo likes to keep things hidden, and good for him. He's really showed people this and allowed me to see this, but I'm giving it to you right now. From the weekly time frame, we are bearish. On the daily time frame, we are bullish. You guys might be confused if that happens, but we have a daily key level on the 4-hour time frame. We have a 4-hour CRT while hitting the daily key level. We were bullish at the open of the day. Where will we be bullish up into? The key level. Once we hit the key level and we see a reaction like so, timed CRT, timed purge, we are now bearish and want the opposing end of the weekly CRT range to be hit. This movement was not random. We went up because the daily was bullish. But the daily key level where the 4-hour CRT is was important because that allowed us to hit our weekly CRT. So that in itself explains how higher time frame bias can be used. It may sound confusing. Rewind everything in the recording and listen to that part again. And then ask me questions when in the group chat. So if you guys have questions only after rewatching what I just explained and taking notes, then ask me in the private group chat. Next question, please.
Can I speak?
Yeah.
So I was wondering if we can use that model on the 4-hour CRT during the London session and taking the range from the 10 4-hour candle and enter during the London session with the same principles and the same rules. 15-minute time frame, London session, and then enter off the order block or after we close under it, after the second close. Could we use that as well? So we could have more setups during the month with CRT, both New York session and London session, since Euro USD is very active on London session as well.
The answer to that is yes. So the 5 a.m. model on the 4-hour time frame is not the only model that can be used. This is for New York session, as you've said it. And there is a model to be used during the London session as well. Sham teaches that model as the 3 a.m. model. I will dive into it as well. I want to give credit to Sham, as he has taught this on his YouTube for free. So I'm going to teach the 3 a.m. model, as he calls it, later on. That is for London session.
All right, thank you.
No problem. Any other questions?
I wonder if you could, it's not really a question, but I just wondered whether or not you could possibly show where you think the 15-minute, the 15-minute CRT was on yesterday's NASDAQ 9 a.m. model on the Friday.
15-minute CRT for the 9 a.m. CR model? Are you referring to that?
Yeah.
Okay.
Yeah. Thank you.
No problem. From what I saw, actually, from what I remember, we had equal highs on the lower time frame, and there was no CRT. However, for those of you paying attention, MNQ actually broke through the highs. So let me show you something. If I'm correct here, and that is correct.
Frequently asked question regarding CRT or about CRT, yes.
Okay, so 1 hour, we have the 8 a.m. high, 8 a.m. low, correct? We do not use any of these candles because all of the ranges have been broken. 15-minute time frame. I mean, this entire 8 a.m. 1 hour CRT can be used on the 15-minute as well. So the 15-minute and 1 hour range are the exact same. Nothing more than that. Now, was there an entry? 1 minute? No, there wasn't. We created equal highs. Now on MNQ, if you guys trade MNQ, you would have had an entry, potentially 15-minute CRT swept, as well as the 8 a.m. Let's rewind the time here as well, make it easier. 1 minute order block formed with a close below. Entry short, and that would be a 3.38 R to R if you choose to put your stop loss at the close of the order block. You would have a 4.19 R to R. That is MNQ.
On that particular trade, though, there was no double tap there, was there at all? There was no double highs broken. That was just the single high broken.
Are you referring to a 15-minute high and a 1 hour high being broken?
Yeah. Yes. That didn't occur on that one, but
you're talking about NQ or MNQ?
On the MNQ, I think really what I'm saying there was normally you look preferably for a 15 and the 1 hour CRT highs or lows to be broken. Yeah.
But this in itself, the 15-minute CRT is the same high and low of the 1 hour CRT. Yeah. So
a single break would do it then in that respect.
Exactly. If they're overlapping.
Okay. Yeah, brilliant. Okay, that's great. Thanks.
No problem. Now, let's take a look at ES. Why do I want to look at ES? Because for those of you who don't trade MNQ and want to find a way to enter this, because in fact there is an order block on the 1 minute time frame. We close below entry off this order block. How do you catch that entry? Well, if ES gave us an SMT, that would have been basically a valid entry. Let's just remove the drawings here. 1 hour. $8 a.m. high and low. $15-minute high and low, same thing on ES. And we want to advance time to 9:41. ES was not even close to its high here. So going to a 1 minute time frame, you can see ES did not even close above the 1 minute fair value gap, whereas NQ did. We turtle soup the high and we were heading lower. NQ closed above the high, continued heading higher. I would not execute this trade. Now, you could say these equal highs with ES closing and turtle souping these lows is an SMT. I do not execute trades like this. And regardless, Friday was NFP. You should have not been trading unless you see an A+ setup. Was this an A+ setup with the order block being created? No. Now, if you trade MNQ, sure, that was an A+ setup with the order block formation right here, close below, entry at order block, immediate rejection. That was A+. NQ, no. ES, no.
Sorry, this might be a stupid question. What's the difference between the two?
So MNQ is the, as you can see right here, micro E-mini NASDAQ 100, and the NQ is the NASDAQ E-mini. So the micros are smaller contract sizes. They allow people with smaller account sizes to trade. And if you only trade, let's say you're someone who's been trading with one NQCon, and you're probably going through a dilemma now. How do I take partials if I'm only in one contract? Well, you trade MNQ, and 10 MNQs are the equivalent to one NQ. So you're able to take partials throughout your trade. They are the exact same. Now, there will be slight discrepancies in the charts. As you can see right here, MNQ, we tapped above the high a few ticks, and NQ failed, created equal highs. But everything else really is the same. Everything is the exact same. It's an exact replica, except for small, slight discrepancies like so. Basically due to a different contract, right? Different orders being submitted.
So could we use it as a confluence like we do for ES?
No, not necessarily, no.
All right, okay, thank you.
No problem. Now you can, I mean, there's not really a point, but you can have both MNQ and NQ open on your chart. And if you see something like this form, then you would execute on MNQ and say, okay, I'm not going to execute NQ today. I'll execute on MNQ. So if you trade 2 contracts on NQ, you would execute 20 contracts on MNQ just for the same dollar value per tick. And that's it. So we've been going for about an hour and 20 minutes. I'll answer one last question.
I do have a question though.
Yep, go for it.
So if we're using the 4-hour 5 a.m. candle, and we'll use the range of 9 to 10:30, but sometimes we do have 10 a.m. use, and that would be the manipulation. So how can we shift those 15 minutes range, or how it works?
So are we talking about the 9 a.m. CR model?
Yes. So apparently we'll use the 10 a.m. candle instead of the 9 a.m. candle because 10 a.m. will be news or something.
Yeah, I want to pull out an example. If we can get one here. Well, we don't. Here we have 9 a.m. souping 8 a.m. highs. All right, whatever. We'll just use this. Let's say 9 a.m. did not soup 8 a.m. highs, scratch that out, and 10 a.m.'s candle did something like this, right? And we souped 9 a.m.'s highs. The only thing you would do is take your high and low of the CRT, very, very simple, very straightforward, and use the 9 a.m. candle for that CRT range. So when you hop down to a 15-minute, you would look for a 15-minute CRT at the high or low. At this point, we're looking at the high 15-minute CRT at the high of the 1 hour range. There is a CRT right here. It aligns with the lower portion. Let's say 5 minutes. You would see we wick above with this wick. This wick is unimaginary right here. Let's say this did not wick above, but only 10 a.m. did. We wick above the high, come lower. Look for the order block right here. For example, let's say there was an order block here. Entry with the retrace up, targeting the opposing end. On the 15-minute chart, of course, this is a close above. It still is a CRT, just lower probability, so I would have not executed this. I'm just trying to make this example flow better as it's a random point on my chart. Is that a good explanation, or am I missing a part of your question?
Yeah, you got it. Thank you.
No problem. So that's going to be the end of today's session. An hour and 21 minutes. I think I did about 55 minutes or an hour of the chapter 1 presentation. The rest of it was the Q&A. We'll catch up very soon. There's going to be the breakdown tomorrow. It may be live, depending on how things go tomorrow, or it will be recorded. Besides that, a schedule will be coming out for next week. As I mentioned in the live trading sessions in the previous week, I will be trading London session a few times. So maybe once, maybe twice. I'm not sure yet. I will see how the open goes on Sunday, tomorrow. All right, guys, have a nice one. Keep on studying. And the recording of this live stream will be out in about 15 to 20 minutes, depending on how long this takes to upload. Maybe even 30 minutes, not sure. All right, have a nice day, guys.
Good evening.
Good evening.
All right.